Imagine walking into a bank with $10 in your account. Now imagine walking into that same bank with $10,000, then $100,000, $1 million, $10 million, and finally, $1 billion. Same building, same bank logo, same polite smiles. But the way you're treated, it can feel like you walked into 5 completely different institutions. At the lowest level, you may be asking the bank for permission to borrow money. At the highest level, the bank may be asking you for permission to manage it. And that's the fascinating part. Banks don't simply look at how much money you have. They look at how profitable, predictable, creditworthy, and strategically valuable you are as a customer. The more valuable you become to the bank, the more the relationship can change. Today, we're going through the different levels of wealth, from being completely broke to becoming a billionaire. And we're going to explore how your relationship with banks can change at each level and stay until the end, because the billionaire level is where banking stops looking like ordinary banking and starts looking like a private financial ecosystem built around you. Let's start at the bottom. Broke. Imagine your bank account has almost nothing in it. Maybe you have $20, maybe $5, maybe your account is actually negative. At this level, the bank isn't thinking about your investment portfolio, your family office, or your international tax structure. They're thinking about something much simpler. Are you going to repay what you owe? When you're financially struggling, banks can become surprisingly strict. You may have difficulty getting a credit card. You may receive a low credit limit. You may have trouble qualifying for a personal loan. And if you do qualify, the interest rate can be expensive because the bank sees you as a higher risk borrower. This creates one of the frustrating realities of money. Being poor can make financial services more expensive. If you have little money, you often have fewer financial options. If you have strong credit, stable income, savings, and assets, you usually have more options, and those options can become cheaper. For example, imagine 2 people want to borrow $10,000. Person A has unstable income, little savings, and a weak credit history. Person B has stable income, excellent credit, substantial savings, and investments. The bank doesn't necessarily see these 2 people as equally risky. Person B may receive better terms. Person A may receive a higher interest rate or may be rejected completely. And here's where the cycle can become frustrating. You need credit to build a strong credit history. But sometimes you need an existing strong financial history to get good credit. That's why building financial stability isn't just about earning more. It's also about creating a record that tells financial institutions, I'm reliable. But now, let's move one step higher. Low income. You're working. Money comes in every month, but there's not much left after rent, food, transportation, bills, and everything else. Your bank may still treat you primarily as a transactional customer. You have a checking account, maybe a savings account, maybe a debit card, maybe a small credit card. The bank makes money from your transactions, account fees, lending products, and potentially other services. But you're probably not receiving a personal banker who calls you every few weeks asking, "How can we help you?" Instead, you're expected to navigate most things yourself. Need a loan? Apply online. Need a new account? Fill out the form. Have a question? Call customer service. At this stage, the bank is mostly providing products, and that's an important distinction. At lower wealth levels, banking is often product-focused. Credit cards, loans, checking accounts, mortgages, savings accounts. But as your wealth grows, banking can become increasingly relationship-focused. And that's where things start getting interesting, because now we reach the middle class. Let's say you've built a stable career, you earn decent money, you have savings, you have a good credit score, maybe you own a home, maybe you have retirement investments, maybe you have several years of financial history. Suddenly, you become a much more attractive customer. The bank can potentially earn money from you in multiple ways: your mortgage, your credit card, your investment accounts, your savings, your insurance products, your business accounts. And because you have more assets and income, the bank may be more willing to offer you better products. You might receive higher credit limits. You might qualify for better loan terms. You may receive invitations to premium banking programs. And you may finally notice something important. Banks don't only want your money, they want your entire financial relationship. Think about it. If a bank only holds your checking account, it has one relationship with you. But if that same bank holds your mortgage, investment portfolio, business account, credit cards, and savings, now you're much more valuable. The bank isn't just your bank anymore. It's becoming your financial platform. And that brings us to the upper middle class. At this level, you may have substantial savings and investments. Your income is high. Your credit is excellent. You may own property. You may own a business. And you may have enough assets that financial decisions start becoming more complicated. You don't just need somewhere to store money. You need to figure out what to do with it. How should it be invested? How much should remain liquid? How much debt should you use? Should you refinance? How should you structure your business banking? What happens if you suddenly need $500,000? This is where banks can start becoming much more proactive. Instead of simply selling you a credit card, they may introduce you to wealth management services. A relationship manager may become your primary point of contact. You might have access to financial advisors. You might receive invitations to exclusive banking events. And you may find that getting attention becomes easier. Why? Because your financial relationship is becoming more valuable. But here's something important. Don't confuse better treatment with free money. Banks are businesses. They're not giving you special treatment because they suddenly became your best friend. They're giving you access to services because your relationship can be profitable for them. That's why wealthy customers should always ask, what is the bank earning from this relationship? Because sometimes the premium service comes with higher fees, investment costs, lending requirements, or other conditions. Now, we enter a completely different world. The millionaire level. This is where the relationship can shift significantly. Imagine you have several $1,000,000 in assets. You might have stocks, real estate, businesses, retirement accounts, cash, private investments. At this point, your financial life is no longer just about earning a salary and paying bills. Your money itself has become an economic machine, and the bank wants to participate in that machine. This is where private banking becomes much more relevant. Instead of waiting in a normal branch, you may have a dedicated relationship manager. You might have access to specialized lending. And here's something many people don't realize. Wealthy people can sometimes borrow against assets instead of selling them. Imagine you own a large investment portfolio. You need cash to purchase a property. You could sell some investments, but selling may create taxes or disrupt your investment strategy. Depending on the circumstances and risk involved, a wealthy client may instead be able to use eligible assets as collateral for a loan. The bank gets interest, the client gets liquidity, and the investments may remain invested. Of course, borrowing against investments isn't magic. If markets fall, collateral requirements can become a problem. Debt still has to be repaid, and leverage can magnify losses just as easily as it can increase purchasing power. But this illustrates something fascinating. At higher levels of wealth, people can use assets to access capital. At lower levels, people often need income to access capital. That's a major difference. Now let's go higher. Multi-millionaire level. Suppose you have $10 million, $20 million, or $50 million in assets. The bank may no longer see you as an ordinary customer. You could be considered a significant relationship. Your financial needs may include multiple businesses, properties, investment accounts, international transactions, estate planning, lending, and complex asset structures. The bank may bring different specialists into the conversation: investment professionals, lending specialists, tax professionals, trust specialists, estate planning professionals, international banking experts. The goal isn't simply, where should you put your savings? The question becomes, how do we manage an entire financial ecosystem? And this is where the difference between being rich and being financially sophisticated becomes extremely important. Someone can make $10 million and still manage money terribly. Someone can inherit $20 million and lose a significant portion of it. Someone can have enormous assets but poor liquidity. Wealth creates opportunities, but it also creates complexity. And complexity creates demand for specialized financial services. Now we enter the ultra-rich level. At this level, your financial life can become almost impossible to manage using ordinary retail banking. You might own companies. You might have international investments. You might have multiple properties. You might have trusts. You might have private equity investments. And your financial team can become much larger. Your bank may have dedicated specialists analyzing your situation. You may receive customized lending arrangements. You may have access to private investment opportunities. You may have customized credit facilities. You may even have conversations about financing deals that most ordinary customers would never encounter. And here's the strange part. The richer you become, the less likely your financial life is to revolve around a simple bank account. Your money can become distributed across a network of institutions, custodians, investment vehicles, businesses, properties, and financial structures. At this point, how much money is in your checking account becomes almost meaningless. Your net worth matters. Your liquidity matters. Your cash flow matters. Your assets matter. Your liabilities matter. Your ownership stakes matter. And your relationships matter. Now imagine going one level higher, the billionaire level. This is where the relationship between an individual and a bank can become almost unrecognizable compared with ordinary retail banking. A billionaire doesn't necessarily walk into a branch and ask, "Can I increase my debit card limit?" Their financial needs can be much larger. They may need hundreds of millions of dollars in financing. They may own large businesses. They may need complex credit arrangements. They may have investments across multiple countries. They may need liquidity without selling major assets. They may need sophisticated estate and succession planning. They may be involved in acquisitions. They may need financing for corporate transactions. And at this level, banks aren't just asking, "How much money do you have?" They may also be asking, "What opportunities can we help you finance?" That is a completely different relationship. And here's the twist. You might think billionaires keep billions of dollars sitting in a normal savings account. They usually don't. Large fortunes are often spread across businesses, stocks, bonds, real estate, private investments, trusts, and other assets. Cash is only one piece of the puzzle. This leads to one of the biggest lessons from the entire wealth ladder. Rich people don't necessarily have more cash. They often have more control over assets. And control over assets can create access to capital. Imagine you own a valuable company. You don't necessarily need to sell the company every time you need money. You may be able to raise capital. You may be able to borrow. You may be able to sell a small portion of your ownership. You may be able to use eligible assets as collateral. The exact strategy depends on the person, jurisdiction, assets, and risks involved, but the fundamental idea is powerful. Wealth changes the way you interact with financial institutions. Now there's another fascinating detail. At the lower levels, people often ask banks, "Can I borrow money?" At the higher levels, the conversation can become, "What can you finance for me?" That's a massive psychological shift, and it reveals something about the financial system. Banks make money by moving capital. They take deposits and other funding sources, manage risk, make loans, provide financial services, and facilitate transactions. Their ideal customers aren't necessarily people who have the most cash sitting idle. Their ideal customers can be people with strong assets, reliable cash flows, valuable businesses, and sophisticated financial needs. So if you want to move up this ladder, the goal shouldn't simply be, "How do I make my bank treat me better?" The better question is, "How do I become financially stronger?" Build your credit history, increase your income, reduce unnecessary debt, build an emergency fund, invest consistently, acquire productive assets, learn how taxes work, understand interest rates, learn how loans actually work, build valuable skills, start businesses carefully if you're capable of doing so, and most importantly, don't try to look wealthy before you actually become wealthy, because there's a huge difference between looking rich and becoming financially strong. Someone driving an expensive car with $20,000 of high-interest debt isn't necessarily financially powerful. Someone driving an ordinary car while quietly building a diversified investment portfolio may be in a much stronger position. The goal isn't to impress the bank. The goal is to build enough financial strength that you have options. Options to say no, options to wait, options to invest, options to handle emergencies, options to negotiate, options to take calculated risks, and eventually, options to make money work for you instead of depending entirely on your next paycheck. Here's your retention question. Which level are you currently at? The broke level, low income, middle class, upper middle class, millionaire, multi-millionaire, ultra rich, or billionaire mindset. And notice I said mindset at the end, because you don't have to be a billionaire to start thinking differently about money. You can start today. Instead of asking, "Can I afford this?" Ask, "Will this make my financial position stronger or weaker?" Instead of asking, "How can I look richer?" Ask, "How can I own more productive assets?" Instead of asking, "How much can I borrow?" Ask, "How will this debt affect my future cash flow?" And instead of thinking about banks as magical institutions that either approve or reject you, understand what they're actually doing. They're evaluating risk. They're evaluating profitability. They're evaluating relationships. They're evaluating your ability to repay. And as your financial strength increases, the range of financial services available to you can increase as well. But remember this, the bank is not your friend, and it's not your enemy either. It's a business. Your job is to understand the game, Know what you're paying. Know what you're borrowing. Know what you're investing in. Know the risks. Read the terms. Compare offers. And never let the appearance of wealth convince you that you've achieved financial freedom. Because the ultimate goal isn't getting a nicer office at the bank. It isn't getting a private banker. It isn't getting a black card. It isn't having someone personally answer your phone. The ultimate goal is having enough financial independence that your life isn't controlled by your next paycheck, your next loan approval, or your next emergency. That's real wealth. And here's the final thought. A person with $1,000 may think the millionaire's greatest advantage is having $1 million. The millionaire may think the billionaire's greatest advantage is having $1 billion. But the deeper advantage isn't simply the number, it's access. Access to information, access to capital, access to opportunities, access to specialized professionals, access to better financial tools, and most importantly, access to choices. The more financially powerful you become, the more choices you can potentially create. So don't obsess over being treated like a billionaire today. Build the kind of financial foundation that makes tomorrow's opportunities possible. Start with your credit, then your savings, then your investments, then your income, then your assets, then your financial knowledge. Because wealth isn't built by changing the way the bank looks at you. It's built by changing the financial position you're bringing into the bank. If you found this breakdown useful, hit the like button, subscribe to the channel, and turn on notifications because we're going deeper into the financial system in the next video. And send this video to someone who thinks banks treat everyone the same. Because once you understand how money, risk, credit, and assets interact, you start seeing the entire financial system differently.